In this video, we'll dive into Altria Group's cost of goods sold, or COGS. This number represents the direct costs of producing the goods and services that generate revenue. It typically includes raw materials, labor, and manufacturing expenses directly tied to production. We'll analyze Altria's COGS year by year, looking at whether it's consistent and what percentage of total revenue it accounts for. Stability in COGS is a key factor for investment-grade companies. We'll also assess Altria's gross profit margin, aiming for a minimum of 40%, with higher margins being even better. Let's begin. In 2014, after excluding both cost of sales and excise taxes from net revenues, Altria Group's gross profit stood at $10.16 billion. This resulted in a gross profit margin of 56.6%, which exceeds the 40% investment-grade benchmark, showcasing strong profitability. In 2015, Altria Group's gross profit was $11.11 billion. This gives a GPM of approximately 58.9%. Looking at the data from 2014 to 23, Altria Group's performance stands out. Revenue has remained solid, with only slight dips in 2022 and 2023. Both cost of revenue and excise taxes have stayed steady, with excise taxes seeing a minor drop in recent years. The key takeaway is Altria's gross profit margin, GPM, which has steadily risen from 56.6% in 2014 to 69.7% in 2023. This upward trend shows the company's ability to increase profitability and manage costs effectively. To wrap it up, Altria's revenue and profitability have seen steady growth. The rise in gross profit margin signals the company's improving efficiency, making it a solid investment option. If you found this analysis helpful, don't forget to hit that subscribe button for more insights. In our next video, we'll dive into Altria's marketing, administrative, and research costs, so stay tuned for that.